Yeah, I'm happy to chat about whatever. I just wanted to say that.
Awesome. So just make sure that you don't hide your face completely. So just stand like slightly like this, yeah. So that your face is also visible and it's like a conversation. Okay, awesome. We'll get started. Very nice to have you, Austin. Welcome to CryptoTown. I don't need to welcome you to New York. You've been here for like, how many years now?
Yeah, I've been in the New York area, I don't know, like 15, 20 years. So I've been here a really long time.
Interesting. And where did you grow up?
I grew up in Connecticut, moved around a lot growing up. I lived in Chile for 2 years, in Hungary for 2 years, studied abroad in Australia. Been all around, but in the New York area the last 15 years.
Awesome. So you were the partner at CoinFund. You were there for 3 years. You were also the vice president for like an exchange traded product organization. After that, you were also like a founder of a crypto project, right? Your life has been a typical finance bro life, to say the least, right? Before we dive into all of this, who is Austin and what's his story?
Yeah, happy to tell you a little bit. So I kind of took an interesting route into crypto and into running a fund. I've always been fascinated by financial markets and investing. Made my first trade in equity markets when I was 10, started trading options when I was 16, and went to school to study finance in undergrad, knowing that I wanted to manage capital down the line. And then did some banking and trading internships. I worked at UBS and JP Morgan and Lazard, and realized this is less interesting than I thought it would be.
Yeah.
One of my close friends and roommates in college worked at a bunch of different startups, worked at First Round Capital, started a bunch of different startups, and pushed me down that path. And instead of working at an investment bank after college, I ended up joining a relatively early stage cross-border payments company called Payoneer. Worked there under the CFO and CEO doing corporate development, data analytics, financial analysis, and was there for 5 years as the company scaled up from 17 people in the headquarters, about 60 people total, to 1,200 people globally. ARR grew to $400 million. But during that time, kind of came across crypto. Ethereum was what really pulled me in 2016, although first came across it in 2013, and got the bug. Left my job at Payoneer to start a crypto protocol in 2018. As you mentioned, was at 21 Shares, leading finance and strategy. Then joined CoinFund, became a partner, investing across liquid and venture, and then started my own thing earlier this year.
That's a lot to unpack. Let's take it slowly, right? So where you grew up in Connecticut, right? And you made your first trade at 10. Like, tell me, how did that happen?
Yeah, my grandparents passed away in their 90s. They passed a small amount of money to me, nothing kind of major. And at that time, this was before index funds were large, my parents thought, well, instead of just putting in a bond, it's worthwhile for me and my brother to learn about financial markets and to trade. My mom has a background in capital markets, my dad as well as being a corporate attorney. So the timing of it all came together in a funny way, but my very first trade was to buy shares in Microsoft on September 10th, 2001.
You remember the date?
Yeah, it was a crazy day, obviously. The very next day, September 11th. And, was watching CNBC in the morning, saw the planes hit, and markets were closed for a week after that. So literally right here, you can see Freedom Tower. I got exposed to a lot of volatility really early on, and there was something about being able to track financials, track real indicators of how a company was performing, and being able to make informed decisions on that I found really interesting. This is just as we were coming off of the tech bubble. I actually made my first trade over the phone. It was pre-internet brokers. I'm not so old, but I was right at the cusp of that. And then eventually online brokers and otherwise. But yeah, started investing in Cisco, bought Amazon at $7.
Wow.
Learned a lot about if you have conviction in something, hold it, because I should have held my Amazon. Did a lot in biotech and alternative energy. And then when I was 16, started trading options more as a way to express leverage and additional conviction on my highest conviction views. Also doing some volatility trading around FDA announcements where it looked like the companies were mispriced based on the magnitude of the news that was coming out.
Interesting. When you were in your school, you founded your investments club, right? Then when you went to college in Wharton, you were in the investments club again. So you always wanted to be a VC, was it?
Yeah, so I started the investment club at Dalton, where I went to school. I won the investment competition based on incredible performance in First Solar. For anyone that was trading in 07, 08, solar stocks were just ripping. And then started the Wharton Investment Club, studied finance undergrad there, and mentioned all those different internships, and took a U-turn by joining an early stage startup.
Yeah.
The traditional path to venture is 2 years investment banking, and then moving over to one of those sorts of roles. But I wanted to do something that was a little bit more interesting, gave me differentiated exposure and experience. That's the path I took.
So you also were a crypto founder for a brief period, right?
Yep.
Can you tell about your experience and what were your learnings in that?
Yeah, well, when I left Payoneer in March of 2018, I had done really well with my PA in 2017 and 2016, like a lot of other people at the time. But one realized the market was topping and it wasn't the ideal time to deploy. An experience you get running a fund at a professional level versus a personal level that I realized that I hadn't yet had, and ended up connecting with a couple folks that were building a DeFi protocol focused on tokenized securities.
How did you find crypto? Even before this?
Yeah, it's a funny story actually. Just as I was graduating school in 2013, my brother was invited to a poker game and the buy-in was Bitcoin. It was one of those OG poker games.
Yeah.
At that time, Bitcoin was $40, so the buy-in was 1 Bitcoin.
Yeah.
My brother ended up winning the game and calls me afterwards and says, I won something called Bitcoin, but I don't really know what
Which
it is.
year was this?
This was April 2013. Yeah, so it was just as Bitcoin was making its run to 100, then pulled back, and then in November of that year made its first run to 1,000. I helped him set up the custody and the wallets and started working cross-border payments. So, it was definitely tangentially related and kept track of it, but more from a price and markets perspective.
Right.
It wasn't really till I came across Ethereum in 2016, where there's just much broader surface area of a decentralized global state machine for application building really piqued my interest, and then that's when I started going to a bunch more meetups, working with some teams, investing more actively. But yeah, it was 2013, random circumstances. I think a lot of people made their first investment, or at least got first exposed to crypto through poker, so not entirely unique.
It's either gambling or drugs.
Poker being the third.
Yeah,
there's a lot of sports betting people in the early days as well.
All right, so it's 2013, now you know what Bitcoin is. Now let's go chronologically in your life. Where are you in life and what did you do next?
Just graduated from school, started working at a company called Payoneer, focused on doing cross-border payments for companies like Amazon, Airbnb, freelancing companies and others that had to make large distributions to small and medium-sized businesses around the world, particularly in Asia, Eastern Europe, Africa, and South America. The company was about to do its first large US capital raise, rebuilt their models to help them do that raise. We ended up raising $25 million from Susquehanna, down the lane, a whole bunch of other capital raises, $300 million in total. Grew with the company, incredible place to learn, an incredible mentor, Michael Levine, who's actually now the CFO of Fireblock. So he made his way into crypto over time as well. Just huge attention to looking at data from a variety of different angles, focusing on complex analysis, and I think that helped fine-tune a lot of the skills
this
that I had
was like your
invested.
foundation, right? Like,
yeah, this was my first job
from.
out of school and where I was for 5 years before I became a founder. So really, really important role for me.
How was the founder experience?
The founder experience was great. I was building entirely during the 2018, 2019 crypto winter. Yeah. So there's times where it's easier and tougher to be a founder. Yeah. That probably was during the tougher. But found some interest. There was a lot of focus on tokenized securities and real-world assets back then. I think it was probably 5 years too early. Yeah. Right now it's starting to inflect, but at that time, the timing wasn't right. The regulatory frameworks weren't in place, and DeFi was still just a little bit early. I had a great experience doing that, working with some great people. But when I realized that it didn't really have the escape velocity that I thought it needed, that's when I shifted gears and joined 21 Shares on the finance and strategy side. At that time, 21 Shares was sub 100 million of assets under custody. Just ETPs, exchange traded products in Europe, hadn't yet launched the ETF, which launched earlier this year. And they've done an incredible job. They're now, I believe, 6 or 7 billion in assets.
Yeah, if you Google 21 Shares, the first 2-3 results are only like Ethereum ETFs, Bitcoin ETFs and everything, right? Let's take a breather here. And so you were the Vice President of Finance at 21 Shares, which is like an exchange traded product company, right?
Yeah.
Explain us, like we're five, what is an exchange traded product? Everyone has heard ETFs. What is it exactly?
Yeah, so an ETF an ETP, exchange traded product, is a very, very similar sort of product as an ETF, but just based on European and other international regulatory guidelines.
What is an ETF?
Yeah, so an ETF, I guess a much broader view, an ETF is an exchange traded fund, and it allows people to invest in equity capital markets, in other sorts of assets in a much easier way, where you package the assets underneath it. It can be something a lot of people are familiar with, for example, like S&P 500 ETF, where that is a proxy for the S&P 500 index, and it allows investors to get easy exposure to that. You can have ETFs for commodities, you can have ETFs for other baskets of stocks, and it was a monumental undertaking over the last couple years to work with the SEC to get ETFs approved in the United States for crypto assets. The first one went live in January. That was Bitcoin, and we've had $20 billion of net inflows since then, which makes it one of the most successful ETF launches in US history. The Ethereum ETF went live earlier this summer. But
the Bitwise ETF?
Yeah, well, there's ETFs from Bitwise, from 21 Shares, from BlackRock, and a whole host of different ones. I think it's 7 or 8. But what ETPs offered before then was a way for investors in Europe and also those in the US that had accounts that allowed those investors to trade in Europe, the ability to get relatively low cost, transparent access to crypto assets on equity markets versus only through exchanges or self-custodial means. Those sorts of ETPs were trading at the NAV, which means the net asset value of exactly what they held, whereas prior to that there were what's called trust products. Those were primarily run by Grayscale in the United States before, and those trust products we don't need to get into too much detail, but didn't have the same sort of mint creation redemption process where you could create new ETPs and then redeem them exactly at the value that they had. There was a time differential, so that meant in the early days when there was a lot of demand for Bitcoin and Ethereum products, these trust products were trading at a huge premium to what they actually owned, and then later on in bear markets were trading actually at a discount to the assets they owned. So ETPs made it a lot easier for investors to get exposure to exactly what these products own versus the trusts historically had been a lot more variable.
And what was your role at 21 Shares?
Yeah, my role was leading finance and a lot of strategic initiatives related to launching new products and managing project treasury and other things.
I was going through LinkedIn or Twitter, and somewhere you had mentioned it required strategic modeling and forecasting. Can you double click on that, what exactly that entails?
Yeah, so it's a lot of thinking around what are the capital needs to both fund the ongoing business as well as strategic initiatives and manage that at the same time while thinking about what needs to be raised on the capital side. Should the company bring in new capital? What sort of partners make sense to have? So it's really just modeling out cash flows as well as modeling out the revenue side of the business to bring in new capital.
After 21 Shares, you were at CoinFund for 3 years. How did you find CoinFund and how did that happen?
So I was at CoinFund for 3.5 years, joined in DeFi summer, and connected with one of the partners because we were in the same Telegram group.
Okay.
And they were looking to
TradFi bros use Telegram as well?
Yeah, well, it's not entirely TradFi because I was startup since the beginning. But it was a really cool Telegram group of some interesting founders and investors in the space, and they were looking for some new investors to join. I've been investing at that point, since I was 10 years old, but never professionally. And we jumped on a call, and they asked, can you write an investment memo? We want to see how you present a thesis. And then later that day, just wrote a 10-page memo.
You were born for this.
Yeah, and we just really clicked on philosophy, on where markets were headed, on investment style. So I ended up joining September of 2020, seventh person at CoinFund. Still, very, very early days, and then quickly became a principal, became a partner, investing across both the liquid fund, seed stage fund, and the Series A fund. And yeah, it was an incredible journey. Made some really strong investments, working with a lot of really cool teams.
What are 3 learnings for people who want to start their VC journey, right? Like, you grew up the ranks really quickly from a senior analyst to principal to partner. What helped you there? If people who are watching this want to enter the VC space, what would you say?
Yeah, I would say write as much as possible. Crypto markets and crypto Twitter and the broader community is still relatively small. And if you just put good ideas out there, that starts to get a lot of attention. I think it's sometimes a little bit of a barrier when you start to do that, because you wonder, are my ideas any good? I think it's a muscle that you need to train.
Right.
And start putting out content. Reach out to founders. A lot of them are very happy to connect with people. Start working with teams. That's one of the nice things where you can be an active participant in a community in crypto without necessarily needing to be part of the team. There's lots of ways to add value in the community. And then reach out to folks like me and others. Always happy to grab a coffee. And when you see open roles, just apply. If you've already published research, that ends up being almost like a standing resume that's public and that people can see. So I think that's really the best route to get started. And then when you do get a role and you get a foot in the door, just work really hard. And I think it shows people that are doing this as a job versus people that find this just genuinely really interesting and are passionate about it, because then it's very easy to work really hard. And that's what it is for me. It's one of those things where, in banking, people work 100 hours a week and they hate their life. I don't know how many hours a week I work, but it's at least something like that, but it's a lot of fun.
Right. Now, for the last year, you've been working on your own fund. You launched Relier Capital, right, which is a mix of liquid and venture fund. Explain me what's the difference between liquid fund and venture fund. You're the first liquid venture partner that we have on the podcast, so explain it for us.
Yeah, so a liquid fund is just investing in crypto assets that are already publicly traded in markets, versus venture, you're investing before the token goes live, and that can be at different stages. That can be very, very early on in the pre-seed, it can be the seed, it can be the A. So it might be multiple years before there's a liquidity event and the token goes live, or it could just be a month or two before the token goes live. So it's really just that liquidity profile that makes the difference. But the way I see it, you can't really do one versus doing the other in crypto, or at least you miss a lot of opportunities, because you can have a very early stage protocol that doesn't have a token live yet, and you can have a very early stage protocol that does have a token live. So it's different than traditional startups where you don't have an IPO for many years. The maturity and how long the project has been around doesn't necessarily indicate whether we'll have a token that's live. You kind of miss half the market if you do one versus the other.
In the last year, or 1.5 years, last 18 months, I've seen an increasing trend in number of liquid funds that are now popping up. Why do you think it's the time for venture deals is over in this market right now and liquid funds will prevail more?
I think there's a really great opportunity for both. Why I do both.
Yeah.
But I think liquid markets have matured a lot, where there's a much larger addressable group of assets that are interesting from a fundamental basis, that have real revenue, real activity, whether that's volume, revenue, active addresses, traction in one form or another. at valuations that are quite reasonable, especially compared to private markets. But these things sort of ebb and flow. At the peak of a market, everything in liquid markets is really, really expensive, and that's probably when it's worth sitting in more cash, waiting for the markets to pull back and then deploying, versus venture markets. It's more of a slow and steady investment process over time versus a certain lumpiness based on relative levels of euphoria in markets.
And you call Relay Capital as a, like every fund says that, but like Relay Capital is a thesis-driven fund, right?
Yeah.
What is your thesis for the fund?
Yeah, so the three segments of the market that I think will be most important in driving adoption of blockchains and Web3 technology is highly scalable infrastructure. That one is sort of obvious. You don't have the scalable infrastructure underneath none of this work.
Yeah.
It's becoming more consensus, although it used to be more contrarian, that all else equal, faster generally means better. I've been very bullish on the Solana ecosystem for a long time, and that's a huge focus of the fund. Other ecosystems, like what Avalanche is doing with their L1s, Sui and the Move ecosystem, a lot of different scalable approaches to the EVM, like Say and Monad and Mega ETH and others. So very much leaning in that direction. And then the other two segments where I think we'll have a lot of adoption, more on the kind of a little bit higher up in the stack, close to the application layer, is DeFi and DePIN. So DeFi, I think it's pretty obvious. Crypto, at the end of the day, is an asset ledger.
Right.
And blockchains, when constructed appropriately, are the best, most transparent technology and the most trustless way to exchange and manage assets in a globally distributed way. And I think it's where financial markets will transition over time. And then DePIN, which is decentralized physical infrastructure, is something that's been around for a very long time, although it hasn't always had that moniker, with projects like LivePeer for video transcoding, Filecoin for decentralized storage, Helium, which started as an Internet of Things protocol and is doing incredible things on the mobile wireless telco side. It allows for the bottoms-up bootstrapping of critical infrastructure for traditional industries. That could be telco, wireless, storage, and others, using token economic incentives to incentivize the build out of those networks before the revenue is necessarily there, and then have that infrastructure in place to be able to plug into the demand side and end up being the real kind of underlying substrate for traditional industries. Happy to talk through some examples.
Yeah.
But yeah, those are the three segments that I'm most bullish on and where I'm most focused.
Got it. When it comes to a liquid fund structure, how is it different from a VC fund? And like, I remember like we were chatting this like 2-3 weeks ago, and you were like, there's a subscription model and there are like some certain different things, right? Walk us down that.
Yeah, so a venture model, and this is broad strokes, not always the case, but a venture fund typically, it's a closed-end fund, so there's a first close and usually a second and final close where investors have the opportunity to invest into the venture fund. It no longer takes additional capital and slowly starts to invest over a period of a couple of years, usually 2 or 3 years.
Right.
And the fund calls capital from their investors in chunks as it needs money to make those investments. And then the investments mature, and then they end up returning, hopefully, capital to investors based on performance.
And that's a typical 5 to 7 year cycle.
Yeah, and that's typically, can be as short as 5, it can be as long as 10.
Right.
Typical fund life for venture funds, like 7 or 8 years.
Yeah.
Whereas on the liquid side, it's usually an open-ended fund. This means investors can come into the fund at any point, and based on the lockup period, can also, once their lockup is over, and that can be as short as a year, can be as long as 3 years, typical range, they can subscribe and redeem at any time. And that sort of flexibility is because a liquid fund is made up of liquid assets, and those are easier to buy and sell, which allows for flexibility to investors to come in and out. Whereas a venture fund, once it makes venture investments, you can't just very easily sell those. So it's hard for an investor to redeem during the cycle of the fund.
Right. So when it comes to liquid fund, when you've raised certain capital, right, and you're buying assets openly from the market, is it comparable with trading?
Yeah, it's very similar, although you just have a different set of service providers to make it more institutional in terms of investors getting statements, proper reporting, auditing, and managing tax. So things like fund administrator, custodian, and that could be institutional custodian or an MPC custody wallet like a Firebox or a Fortify. So yeah, it's just different layers of institutional grade infrastructure to make things more secure and transparent. But at the end of the day, you're just buying assets that are on the market,
right?
Usually in larger size, although there's some pretty large whales in crypto.
Yeah.
So there's a lot of individuals that trade
Yeah.
their money that are bigger than some funds.
Got it.
And of course, I want to preface, none of this is soliciting investment for my fund. None of this is financial advice or recommendations. You should consult your own financial advisors for that.
So this is a beautiful segue, because now what we're going to do is a masterclass on trading or token analysis or strategies, right? Because you're the man with blue eyes in finance, 6'5", right?
I'm 6'3", so
close.
2
Okay.
inches shorter.
All right. So when you look at a token, right, like what are the different kind of analysis that you do? There's like a fundamental analysis, there's a technical analysis, right? Like, can you break those down for people working in crypto right now, operators in the space or retail, right? How can they make better informed decisions?
Yeah, so there's a couple lenses through which you can look at a project. One, what's its relative level of traction, and usually you determine that compared to other protocols in that same vertical and sector. So you can look at revenue, volume traded, total value locked, active addresses, GitHub commits. There's a lot of different metrics. It really is important to look at the most relevant one for that vertical. For a DEX or a perps exchange, that might be volume or protocol revenue. For a money market protocol, maybe that's total value locked, or revenue. For a layer 1 protocol, it's a combination of a lot of different things, as well as a lot of different developer metrics, because it's a platform on which people are building. So you kind of have to look at the level of activity on top of it as well. But that's one thing. What's the traction? The second is, what's the quality of the team? There's large communities behind projects, but at the end of the day, it's usually being shepherded by a core group of developers. What are their relative experience? What are their backgrounds? How well equipped are they to build what they've set out to build? What's their track record of doing what they set out to do?
Yeah.
And what's your level of conviction and their ability to execute? Outside of that, there's a lot of tokenomic things. You can have a project that's doing really well and a great team, but the tokenomics don't necessarily make sense and bring a lot of value to the token holders, and that's really important to determine. Also, what's the lockup schedule? What's the flow of new token emissions versus when investors unlock versus when team unlock? Because you can have something that's doing really well, but there's just so much sell pressure that it makes it difficult for the token to perform well. And this is taking much more of a 10,000-foot view, but is this even a sector of the market that you're excited about? Are there competitive moats? Is there ability to have differentiation? Or is this something that ends up getting commoditized and competed down to zero? So looking at it from those different frames and then determining, you can have all of these things working, but then where's it actually trading at, right?
Yeah.
Could be just very expensive compared to the market or the relevant multiples. Maybe they're producing X amount of revenue,
right,
but they're trading at an insane multiple compared to that revenue. It doesn't really make sense. Require a lot of protocol growth to grow into a reasonable multiple. And that's where there's a lot of crossover versus equity markets. When you think of something like a PE ratio, you can do the same thing in crypto,
right,
where you think about, well, what's the protocol earnings and how does that relate to the circulating market cap and to the fully diluted valuation of the project. So I have a pretty long-term outlook, so I don't actively trade in and out of projects. When I buy into something, I look to hold it for a year to 36 months. We'll add to the name as my thesis and what I expect to happen gets confirmed and there's additional data points there. If the thesis is invalidated, the the project isn't executing or the market isn't developing as I expect, I may reduce the position. I invest in category leaders that I think are trading at reasonable valuations and I think are poised to achieve large outcomes in big sectors. These are things that are like, I mentioned perpetuals protocols in DeFi where they have the opportunity to monetize on trading volume and also have a lock-in with leverage. L1s or application-specific chains that have strong virtual machines, programming languages, and developer experience. Deep-in protocols that have strong demand-side activity. One of the things we see a lot in Deep-in is using tokenomics to bootstrap lots of supply side
You're
usage.
a Helium maxi.
I'm a big fan of Helium, and what they're doing, which is leading the pack in Deep-in, they're generating a lot of revenue and growing really quickly. It's not that they've just incentivized thousands of people and hundreds of thousands of people to set up nodes. On the IoT hotspot side, they've incentivized hundreds of thousands of people to do that. It's about 26,000 hotspots for mobile wireless, but they're actually having people that are using those services in the real world that's generating revenue for the protocol. So for example, they have a product called Carrier Offload, which allows large telecom providers to offload the data needs of their subscribers to Helium hotspots when their cell towers are overwhelmed or when there's a gap in coverage from their cell towers. And these are, large telecom providers, like an AT&T or T-Mobile or Verizon, not any of those specifically. They haven't announced which one. They've just said two of the large three, as well as MVNOs, which are virtual network operators that don't have their own towers and leverage other networks for service. And those sorts of large MNOs and MVNOs are using Helium to improve the service for their subscribers. The subscribers don't have to do anything in the background, don't even know that their data is being processed by a Helium hotspot. Right now, about 200,000 people a day are going through Helium hotspots and about 6 terabytes of daily data. And right now, that's a couple million ARR, and I expect it to grow quickly. So examples of things like that are serving a real-world use case, but bootstrapped with crypto economics.
One question I have always had is that when it comes to a liquid fund, you pick up assets in big sizes, right? So how do you offload your own position in an open market? Because I'm assuming when you start selling, that dumps the price if the size is too big as well, right? Are there different strategies of doing that?
Yeah, so it depends on the relative liquidity of a protocol. Something like Solana, as Ethereum or Bitcoin or a larger asset, it takes a lot of money to move the price. Unless you're a huge fund, it's not really going to have much of an impact.
Right.
Lower market cap assets with lower liquidity, it can definitely have that impact. So, there's a couple ways of executing. One of them is a TWAP, time weighted average price, or VWAP, where you're selling little bits slowly to minimize the market impact. Another is you buy or sell a chunk, wait for the market liquidity to kind of reestablish itself in the order books to refill and then do it again. And that's called a block and walk strategy. It's actually an advantage for smaller funds versus larger funds because you can get the relative level of ownership that you want if you're not a mega billion-dollar fund with moving markets a little bit less.
Got it. All right, so this segment we're going to play a little game. It's called long or short.
Okay.
And you're going to tell what are you going to long or short.
Okay, and these are kind of my personal opinion, not the opinions of the fund, not financial advice.
Yes, all right. Polygon.
Short.
Near.
Short.
ZK Sync.
Short.
OP.
Short.
AVAX.
And also, one thing is, I wouldn't actually short any of these.
No, you can't say all this.
No, I wouldn't be a buyer. There's a difference. I don't short anything in crypto because things have a lot of opportunity to outperform.
Right. Let's do this. Let's not call it long or short. Let's call it bullish or bearish.
Bullish, bearish, or neutral?
No neutral. No neutral. All right. AVAX.
Buyer.
Unichain.
Not a buyer.
GOAT.
Not a buyer.
BTC.
So I actually am bullish on Bitcoin, but my fund looks to give differentiated exposure to folks. So I don't invest in Bitcoin and Ether in the fund, but I'm definitely very bullish on Bitcoin.
All right. Don't be diplomatic for these questions.
Okay.
One project you're most bullish on. You can't say AVAX or Helium.
Can't say AVAX or Helium. Very bullish on both of those. I don't know if this is a cop-out, but Solana is an easy answer.
Okay.
I'm incredibly bullish on Solana.
Project that you're bearish on?
More of a broad category. I'm bearish on some of the over-speculation in meme coins right now, and I think it's going to follow the same path as NFTs, where it's hype and then things pull back, and we have this every single cycle. So wouldn't short any meme coins for the exact reason that I gave before. But I think a lot of things will get bid up to very high levels and will go down a lot.
An investment you missed out on and now regret?
Well, that's one of the nice things about liquid markets, because you're always able to buy even if you miss the opportunity.
All right, something from your CoinFund days.
We went through the diligence process, and it didn't end up getting over the line on a couple things. One of them that I very excited about is Jito.
Okay.
This was before they launched the token. I'm very excited about it and very bullish in liquid markets, but that's one that I wish we invested in.
An investment that exceeded your expectation?
Well, when I initially invested in Ethereum at 12, I thought it would do really well, but I think especially in that 2017 period, did a lot better than I expected.
What's a deal breaker when you're investing in a founder?
Someone who's very short-term oriented and isn't looking to build something over a long time horizon, is looking to kind of build something and on to the next thing, because those are the sorts of people that I think are most likely to give up when the going gets tough.
Got it. You said that you're bearish on Unichain, or that you'll short it or whatever, right? So where do you stand on the app chain thesis, and do you think Uniswap now with its own chain, will it suck out liquidity from other ecosystems?
Yeah, so I'm not necessarily bearish on Unichain, and I would put that more in the neutral category. I'm just more bullish, different execution environment. So I think we're going to see a lot of activity shift to Solana, to move VM ecosystems to some of the scalable EVM, like a Monad, say, or Mega ETH. And then also in the EVM L2s, we see dominant players emerging, like an Aerodrome on Base, that has roughly 90% of the DEX volume activity, with a really interesting tokenomic model that already passes all of the revenue to token holders. I think while Uniswap is looking to monetize through sequencer revenue and other things, they're focused on an area of the market that's losing share. They've been slower to do the things that are necessary in some of these emerging environments, and that's, for example, why on Base, which is seeing the majority of the growth among ETH L2s, they're not gaining a lot of share. So, I think Aerodrome is a great example. And also another thing is, for certain use cases like DeFi, I think there's a big need for broader composability. App chains are really valuable for some use cases, less valuable for others. And I think a DEX is something where it generally makes more sense to be within a broader environment versus needing to shift liquidity over to one other ecosystem. And then I think it ends up becoming extractive of Base, of Arbitrum, of OP and others, versus creating a broader interoperable framework that capital can plug in versus needing capital to move over there.
Got it. You started Relay Capital almost a year ago, right?
Yep.
Can you share some pointers for people who want to start their own fund? Like, what does the process look like? What does the behind the scene action look like? Because from the outside, it's like, oh, he runs a fund, it's very exotic, right? But what blood and sweat goes behind that?
So a lot of blood and sweat. I think the easiest way to do it is just reach out to folks like myself and some of the other upstart funds, because you don't really know how to do until you go through the process, and then you really know how to do it. So definitely leverage people in the industry, and I think it's still very, very positive sum, so people are glad to help each other. It's a matter of finding the lawyers to help you set up the infrastructure, the other service providers like fund administrator, custodian, tax, and audit. Know that it's going to be a lot of work and it's going to be expensive, but it's a lot of fun. It's great having the freedom to execute your specific thesis in the market. So, for someone with the right risk tolerance to go out on their own, because you're really starting a startup. So
Right.
even though it's a fund versus a project, it's still company building, and there's a lot of operational things outside of investing. But yeah, I'd just say connect with the right service providers. There's a very tried and true path, and they can take you down it. And there's upstart costs related. Some funds raise initial capital before they go live to fund those setup costs and ongoing costs. Other people just launch it with their own capital. And really, that's the playbook.
This is like the New York edition of CryptoTown, right? Before this, we were in Dubai. The entire motive was to show people what New York life is all about. And it's like the BD hub, the capital hub, right? You've been here for 15, 20 years on the Web 2 side, on the Web 3 side of like finance. Break down New York for everyone, whoever's in crypto who's not in New York, right? Like, what is the culture here, and why should people spend some time here?
Yeah, so there were a couple of different hubs in crypto prior to COVID. New York was one of them, San Francisco was another, to some extent Miami and Puerto Rico, and then in Europe there were folks in Berlin, Switzerland, and Lisbon, a little bit in Dubai, and then in Korea, Japan, and other parts. Yeah. But we've seen a lot of consolidation post-COVID, where a lot of San Francisco people moved to either Texas or to Miami after a year or two. A lot of them actually ended up moving to New York. So we've seen this big concentration with a lot of people moving to New York and Dubai as well. The ecosystem here is really as big as it's ever been across founders, investors, and other operators. So the one really nice thing is when you're visiting a city for a conference, you look to schedule as many coffee meetings as possible because everyone's in the same place. New York is like that all the time. Yeah. You can just schedule coffee meetings with half of the industry because they're based here. Right. So that's a really, really nice thing. And when there's conferences in New York, I usually have them as quiet weeks because I don't feel the need to run around for all the craziness because I see folks other times. But yeah, it's been great being in this area, and it very much feels like the biggest hub of where things are happening.
Awesome. I think we're out of time here, but really nice doing this with you. I think personally, I've learned a lot about liquid funds. I'm sure people would also, but thanks for doing this, man.
Yeah, glad to. Thanks for having me.
Of course. Fun.